Jordan, very good to see you. We start with an important question. Should I consider a Roth conversion before I stop working? Roth conversions are such a great way to create tax-free income in retirement, and that money can grow tax-free indefinitely because those accounts do not have required minimum distributions. So what are the key benefits of doing a Roth conversion while you're still working versus retired?
Well, you got to look at your overall situation, your tax brackets, of course. And when you're still working, you might have some extra cash flow where you can pay the taxes if you were going to do that Roth conversion. Plus, if you're contributing to that 401k or Roth IRA, you might have some limits to do that. But there's no limitations on how much you can convert if you just want to play the tax brackets when you do decide to do that conversion while you're still working.
I'm glad you're bringing up tax brackets because that is such an important part of the equation. So what do we need to take into account when considering our current tax bracket and how those conversions affect taxable income?
Well, what I do for a living is create plans and look at not only your short-term tax liability, but your long-term tax liability, and make sure you have a plan around that. Because the one thing you don't want to do is get blindsided by doing a Roth conversion that put you in that higher tax bracket when you weren't expecting it. So you want to look at the long-term plan and say, hey, based on long-term, I'm going to be always going to be in this 22 or 24% bracket. Maybe I want to pay the taxes now and do the conversion when taxes are at historical lows and fill up that bracket, that current rate, because in the future you might be in a higher tax rate. And as you see on this chart, tax rates historically are pretty low. Let's take advantage of it. Let's buy things when they're on sale. Let's pay taxes when they're on sale. This could be a great time to do that.
Are there any penalties or limitations when converting tax deferred to tax free before retiring?
A lot of people think there's some limitations or maybe there's some fine print in the tax law, but the government would actually love for you to just convert all of your IRAs to Roth this year. But that's usually not a wise or strategic way to do it. You want to be smart when you do Roth conversions and use a runway of maybe a few years to kind of minimize your overall taxes. But you could technically do it all in 1 year, but when you do that conversion, you pay the taxes in that tax year. So usually you want to kind of look at your long-term plan and convert according to that plan up to that tax bracket over a period of time. But to answer your question directly, there is no limitations on how much you can do in a given year.
Okay. What strategies then can I use to minimize taxes when converting? Should those conversions be timed with other deductions?
Yeah, so there's a few things that I kind of talk our clients through. One is if you're going to do a conversion, usually it's not advantageous to pay the taxes from inside that IRA you're converting because then there's
Right.
less in there to grow tax-free. Now, not everyone can do this, but maybe you have some lazy money on the sidelines, some checking, some savings, some money markets that it's really not even keeping up with inflation. You can kind of use those funds to pay the tax liability of that conversion. So you keep the entire amount in that Roth IRA. So that growth will be tax-free on the entire amount you convert because you pay the taxes from an outside account. Another thing is a lot of people are very happy with the standard deduction because it's so much higher than it used to be in years past. But now they're not able to itemize or deduct. But some of these people are just really good people. They love giving to charity. They love giving back in the communities. But what they do is they give every single year the same amount to the charities, and they don't get a tax deduction for that. So again, I think they should continue to give to charities, but maybe we want to stagger this where we don't give it all in the same amount each year. Maybe we wait 2 or 3 years, or we front load and we give a lot in this year, and maybe we don't give a lot for the next couple of years so that we can actually itemize on our taxes, which reduces our tax liability so we can get more money into a Roth IRA. So those are kind of the two high level ones that I think can really benefit a lot of people.
Jordan, I really enjoy having these conversations with you because it helps really kind of enlighten me as to why we're having this conversation today. A Roth conversion may not be right for everyone, but crunching the numbers while we are living in this historically low tax rate does make sense. So if somebody wants to have this conversation with you, what's the best way to reach you?
Yeah, they can reach us at our number 847-499-3454. I just want to leave with one last thought. Would you ever get into a business partnership with someone that could change the percent of what they get out of that partnership? Right?
I would not.
You would not. I would not
No.
either. But when you have an IRA, you are in a partnership with the IRS, and they can change the tax laws any single year. So I rather control what I pay in taxes and take back control of your IRA and your tax liability get out of that partnership the best way possible, strategically and smart, and consider doing a Roth conversion.
Yeah, break up with Uncle Sam. So if you want to, again, have this conversation with Jordan and his team, get your phone ready. We have a QR code coming up for you. Jordan, thank you so much for your time today.
Thanks, Aaron.